later on funky deals. But as these things come up and exist outside of the 3 days that we're here, you will want insight on it. It's very, very expensive to do things incorrectly in this particular industry. So Charlotte.
And you're in the business as a lender, you're in the business of selling money. Money is the product. That means you are actually, when someone asks for your product, that is actual money getting transferred to an individual. Not only you have to protect that money legally, using a paperwork and all these things, you also have to protect that money from scams. I mean, you don't just lose money by doing a bad deal, you lose money by not knowing what the latest scam in the market looks like. So it is, yeah. I don't know how else I can emphasize this. It is crazy.
So important. So Charlotte, yeah, I'm excited to continue working together. Very excited. Okay, sweet. Well, guys, we have coming up to the stage, as mentioned, is a good friend, good investor, credible investor, and our highlighted speaker of the day, which is Stacy Carpenter. Stacy, at this point, how much money have you used yourself or been able to unlock in these cards for investors to use when lending?
Yeah. I want to talk about all of that as kind of part of my intro. So now I'll get to that for sure because that's exciting. It's exciting for me. So good morning, everyone. Exciting for me to be here with all of you. And Alexis, Justin mentioned this yesterday, but I was realizing, so I met you, Chai, and Justin at the Houston PML Mastermind. It was like 2 years ago this month, as I recall.
Wow, that's awesome.
Yeah. And so it really, speaks to the power of networking that we're all on this call, right? Talking to this community. So it's so exciting. And I feel so grateful for that. I've actually been to, this is my fourth of Alexis's masterminds. And some people would say, well, what about, the information? No, it's new information every time. Like you can never learn everything. So my encouraging, word for you would be keep learning, keep learning everything, learning the craft. It just gets better and better. So a little bit about me. Oh, let me share my screen.
Sweet. I'll stop
sharing my screen, right? Now am I?
Yes.
Okay. A little bit about me. So I was in the financial services industry, like I mentioned, for 30 years. And towards the end of my career, I worked for a large bank that went through 4 CEO turnovers in 6 years. So it was, to say the least, a roller coaster of, including all like the subsequent reorgs that happen and layoffs that happen after an event like that. It was brutal. And it really highlighted for me how little autonomy and control you really have working in the corporate world. Obviously, no loyalty, fantastic people got laid off, all about the numbers. We all understand that. But it was really a pivotal time in my journey. So at this time, I started seriously considering leaving to find something I was passionate about, something that would provide me more meaning, and something that would give me more freedom and control in my life. So like Casey's story, the thought of leaving a $200,000 a year paycheck was, extremely scary. But I had reached a point where the lifestyle I was living was no longer worth the life I was losing. And I think that resonated a lot with his story as well. So I'd always been interested in real estate, but as a single mom raising 2 boys, I felt like it was too risky to pursue that earlier on. And I was still at my W-2 in 2023 when I joined the Gator community and learned about lending. After decades of saving for my retirement, I decided to invest in myself and my dreams. And I got started by rolling over a previous employer's 401k into a self-directed account, and that really started my PML journey. I am a helper at heart, and helping investors by funding their projects passively while generating strong, consistent returns was fantastic, and I was definitely hooked. My very first deal was with Alexis, and I have now deployed $2 million of my own personal capital, and over 1 million of that has been with Alexis. So I could not, yeah, I couldn't agree more with Duran when he said yesterday, a good operator is the most important thing. That is a true statement. But with limited personal capital, of course, my growth hit a ceiling, and I turned to business funding to scale my lending business. So that's what really we're going to talk about today. That turned out to be one of the best decisions I could have made. In my first round of funding, I got $200,000 at 0% interest. And that allowed me to add revenue streams and automate operations, invest in new mentorships, improve my skill set, reach new people, and lend those funds getting double-digit returns on other people's money. And biggest news, leave my W-2 last year. So I am now W-2 free, and it's exhilarating. The work is just as hard. I work just as long hours, if not more, but it's for me, and that makes all the difference, right? And because of the impact this made on my life, I became really passionate about helping other people, other investors specifically, use this capital to scale, as well as move them closer to fulfilling their dreams. So I've included a verse at the bottom of this page, and it's especially meaningful to me. It's Proverbs 13:12. I read it one morning when I was contemplating leaving my W-2 and that scary situation, but it really spoke to me and encouraged me to seek more fulfillment in my life. And it still, to this day, speaks to me as I help other investors. It's very motivating for me, so I thought I would share it with you guys. All right, so we're going to move on. Today I'll provide an overview of my funding program, who it's for, the benefits, requirements, and how you can use the capital. And we're going to hit the key points in this deck, but Alexis is going to share the material with you, so you'll get all the details if we're not going to dive into it. There's a lot of information here. So essentially, who this is for, this funding is available to all U.S. business owners at any stage of your business journey, across virtually all industries, and with various products depending on the funding products depending on the stage of your business. So obviously, anybody, real estate investors, right? Contractors, property managers, lenders, online e-commerce retailers who need capital for marketing and inventory, brick and mortar businesses looking to relocate or needing equipment or working capital, and professional services like marketing, coaching business, consulting firms, high ticket offer, coaches, and everybody to grow their operations and help more people. So we work with businesses traditional lenders reject, including high-risk ventures. So if there's a legitimate business need, we have a solution for it. So business owners use the capital to scale their operations, grow their portfolios, solve problems, capitalize on opportunities, and the capital covers just about any operational expense. Again, including marketing, hiring, payroll, building your team, automations, mentorships, expanding locations. We also do equipment loans, working capital loans, purchase software and technology upgrades, and new inventory and emergency operating capital. Tim talked about the importance in his presentation on having a business line of credit for those emergency funds. And that is very, very good advice for everyone. So whatever your business needs to move forward, this funding can help. So I'm going to mention a few of our products, but we're going to deep dive really on the 0% business credit. So our core products, 0% credit is the most popular for new and existing businesses because of the speed and simplicity, and no proof of income is required. There's also an ability to go for future rounds of 0% funding every 6 to 12 months, and we're going to dive deeper on what that looks like. We also have business lines of credit and SBA loans, and both of those are great options for others who've been in business at least 2 years and are generating monthly income. Business lines of credit, like Tim mentioned, they're flexible, they're great to have in emergency, and you only pay the interest on what you actually use. So it's different than a business loan. And then while government-backed SBA loans, they take longer to get, but they have better terms and rates. Again, those are for more sophisticated and advanced businesses. We also offer additional products like unsecured loans, personal loans, commercial loans, cash flow loans. Basically, everyone is a client, right? Any business owner. So even if you don't qualify for funding today because of credit issues, we also have credit repair and credit optimization services that we can work with you on to help you get funding. Okay, let's dive into the 0% business. So this is business credit card stacking with multiple banks at the same time. And the business cards have 0% interest introductory periods for 12 to 18 months. So our program is a done with you partnership, and we hold your hand through the entire process and educate you on the process along the way. So our goal is to help you get up to $300,000 in 0% interest funding, but you will talk to us about your funding needs, and that will be the target. We customize your funding plan based on your funding needs. We also can layer in additional capital additional capital through other lending options that's customized, again, to your current situation. And an example of that is debt consolidation. So many investors use their personal cards to invest or run their business, and that causes high utilization that prohibits them from qualifying for funding. And we actually can help them remove the debt off their personal credit onto a short-term installment loan. And installment loans don't count against your credit utilization. And just moving that off your revolving credit can increase your credit score as much as 30 points. So then when they get funding, they can pay off that installment loan at 0% interest. So that saves them a lot of money and increases their score, getting them qualified for funding, and then they can go through the funding program. And really what differentiates our program is transparency, education, and partnership. Like I said, we're going to hold your hand through the whole way because the process for credit card stacking is very specific. We explain every application and decision throughout the process, and we also teach you how to go for additional rounds of 0% funding on your own, so you never have to pay for another funding company for this funding again. Other companies do not do that. So benefits of business card stacking, we've talked about some. Business credit card stacking is a powerful strategy for all business owners at any stage. It lets you combine multiple business credit cards into a substantial funding pool. So we talked about no docs required. Business cards also offer 3 times higher limits than personal credit lines. business credit establishes and strengthens your business credit profile over time. And that gets you approved for even more advanced funding options as you grow your business. And of course, 0% APR for 12 to 18 months is a repeatable benefit. We're gonna dive into that. You also get credit protection because business credit cards don't report to your personal credit. So it truly separates your business and personal credit. And it's a reusable resource, right? You only pay on what you use and you can reuse it indefinitely. Other advantages with business credit cards, you get cash back, significant cash back, sign-up bonuses, travel points and miles worth thousands of dollars. I have colleagues that travel all the time for free because they're using the points that they get off of business credit cards. Another benefit, low monthly payments. So for business credit cards, banks typically just require 1% of your balance payment each month. So on a $20,000 line of business credit card, if you liquidate those funds and have a $20,000 balance, you make $200 payment a month, which is awesome and way better than putting it on your personal credit. And then, as we mentioned, the future growth potential, because this building of business credit unlocks access to larger lines of business or funding down the road. Our typical first round results are between $50,000 and $250,000, with about 185 to 100,000 being the range of an average. But like I said, I got 200,000, so it really depends on the strength of your credit profile. So I'm going to show you a model of exactly what this additional rounds of business credit looks like, right? So, and then we're going to look at some real numbers. This is just a model, but we'll take a look just for to show you an example. So you go through the first round of funding with us, right? You get approved for $110,000. Maybe that's 3 or 4 credit cards, right? In 6 months, 6 to 12 months, you go through your second round of funding. You're going to be able to roll those credit limits that you were previously approved for over into the new credit cards. Now you're getting approved for more, $170,000. On your third round of funding, it increases to 220 as an example, and on your fourth round, up to 500,000. So that means you had access in these 4 rounds to $1 million in 0% interest business funding, which I don't know. Where would you get that anywhere else? I don't know where that would be. Okay, so we're actually going to dive into some results from a real customer. I posted this on my social media a couple of days ago. So if you follow me, you can take a look at the details, but we're going to talk about his real results. And I want to point out, this is from only one bank alone, right? And when we do credit card stacking, we work with several banks with you at the same time. So his first round, he got approved for $35,000, right? So he had access to $35,000 at 0% interest that first year. On his second round, 12 months later, he was approved for $20,000. He moved the limits from the 35 over and added it to the 20,000. Now he had 55,000, access to 55,000 at 0%. But his running total, right, is 90. The 35 plus the 55 he has access to, the running total for the second round is 90,000. Follow the same as we move on, right? Round 3, he was approved for 10,000. We moved over the credit limits to from 55 plus the 10 is 65, and the running total is now 155,000. His fourth round, he got approved for 5,000, did the same thing, moved over the limits to 70. His running total is now 225,000. His final round this year, he was approved for 46,000. We moved the limits over. So his credit limit was 117,000 at 0%. And the running total of credit he had access to was over $300,000 from one bank, right? So when you start thinking about credit stacking 3 to 5 banks at a time, I mean, the numbers get really big. That's where you start seeing the $1 million. Or you're able to do credit card stacking on every entity. So lots of investors have multiple entities. And if you credit card stack on each of those entities, now you're really talking about and being able to see what the real results and the real possibilities would look like. All right, 4 main requirements for getting the business funding, right? 680 score, no late payments for the last 2 years, clean profile without collections, charge-offs, or bankruptcies, and $10,000 to $15,000 in revolving credit limits, right? The banks like to see a mix of different kinds of credit, and the profile is important. It's not just the score, right? I've seen business owners with 720 score, but they weren't approved for funding because maybe they had too many inquiries, too much debt. Maybe they didn't have a robust profile, and they, had very limited credit history in the past. So banks are looking at the entire profile. So what if you don't qualify? So no worries, right? We have 2 options if you don't qualify today for business funding. One is adding a partner to your LLC who meets the criteria so they can get funding for your business. But the second thing is credit repair. So we can fix your credit. We can optimize your credit profile to get you qualified for funding. We're going to talk about this. This is one of the biggest obstacles, objections that business owners raise. They don't want to go through the time that it takes to improve their credit. And I want to encourage you to think a little differently about that. So we'll talk about that in a minute. So here's what the banks look at. So your FICO score is made up 30% of your limits owed, 35% of your payment history, 10% on new credit, 15% on your credit history, and 10% on that credit mix I was talking about. And this just kind of shows, the range of credit scores. So we're looking at a range right in here for business funding. So there are multiple ways you can qualify for funding, and you would need to meet at least one. So we've been talking about, credit. So personal credit can become your collateral. Essentially, you're personally guaranteeing. It's your personal guarantee with those credit cards, right? Cash flow. So for existing businesses with positive revenue, accounts receivable and can become your collateral. And it's a great option for established businesses. And then hard collateral. You can secure loans with, tangible assets. And basically those criteria are up to the lender. But if you don't meet any of these 3 right now, again, I would encourage you to start today with your credit repair so that we can get you qualified for funding. And once you go through funding, you guys, I can't tell you enough, the banks start throwing money at you. Like going through this process, once you clean up your credit and you get business funding, now you've separated all your finances between, off of your personal and you have business. and you manage that business, you make your payments on time, you manage that the payments on your credit card, I'm telling you, almost daily, I get offers for credit. And a lot of us do anyways, but these are significant offers specifically for business credit, right? So for real estate usage, right? This funding is really flexible and you have control over how you use it. So whether it's down payments, closing costs, gap funding, showing liquidity, funding a rehab, or lending, which is what I did, right? All of those work very well with these cards. So with lending, generating the returns by leveraging the credit for lower risk, short-term lending opportunities is amazing, right? Again, you've got to have a good operator. You need to understand their business model, their risk tolerance. All of those things matter, particularly when you're using this credit. There's probably many of you and I talk to people every day, that went through different funding programs and they were not coached how to do this correctly. There is a correct way to do this, and there's an incorrect way to do this. What you don't want to do is go through funding, get approved for $100,000, liquidate $100,000 and put it on a loan. So in our program, you have one-on-one coaching and they're going to teach you how to deploy the capital into revenue, income making revenue or streams, and depending on what you want to do. So lending is definitely one of them. Other fund companies do not teach you how to do that. So the point of this is really, business credit is extremely flexible. So it's tied to your entity, not to a specific property. So you can use it across multiple real estate strategies and for virtually any expense, and you really have control of how you utilize those funds. So let's talk about liquidation. So people think that you can't get cash off of your credit cards, but that's incorrect. You can convert your credit to cash through a process called liquidation and just pay a standard transaction fee. You're not paying cash advance fees. So you liquidate funds for any legitimate business need, like down payments, anything that needs cash, right? Down payments, mortgage payments, inventory costs, whatever that is. There are services out there like Melio that you can use, but I've personally talked to a lot of people that have had difficulty liquidating through Melio. So it's better to let a professional liquidation service handle this for you. And we've been doing this for the last 4 years. I also get asked questions if business owners can liquidate the funds themselves. And I would caution people to do that. You don't want to do it as it can raise serious risks, can cause business account closures, fraud flags, and compliance issues. So that's never a good idea. So the bottom line with all this, right, is this funding really fuels growth. We service any industry at any stage with any business need. So this is a service that we provide, right? So we consider it a white glove service. We're committed to your long-term partnership with you, and we'll be working with you not just to secure funding for you now and your needs now, but looking at your goals and objectives so that we're thinking down the road to what funding you may need down the road, right, in your future. We're very strategic and intentional about every application. And we also work with you and provide support A to Z, right? So we help with your entity and bank structuring. We introduce you directly to our lenders and internal contacts. We provide exact information on applications. So banks look at hundreds of data points when they're looking at business credit, and, we've talked about there's scams, there's fraud. It's real. And so banks really have a very succinct process and data points that they look at. So we're very familiar with those, and we know just how to coach you through that process. We'll even complete applications for you, but you'll stay fully involved and informed along the way. So our real goal is getting you the resources you need for now, like I said, but also setting you up for bigger opportunities later. And beyond the funding, we do the liquidation services. We help guide deployment of the resources into cash flowing businesses. And again, you'll have one-on-one coaching that'll teach you the entire process and how to become self-sufficient so you can go for additional rounds of funding on your own without ever paying a funding company again. So what is this process? We have a 3-step process. When you submit a request, we do a credit assessment with a soft pull, right? And do a preliminary underwriting of your credit profile. And then we assess your funding readiness. So sometimes we will recommend things that you can do to optimize your credit first in order to get maximum funding, like reduced utilization, like we were talking about before. And then step 3, we work with you to provide a custom funding plan that meets your business goals and your funding needs. And all of this is phone call free, right? So you've not paid for anything, but you've gotten a free funding plan that shows you exactly what kind of funding, how much you can get, like range, the kind of funding you can get, and what that looks like, including timeline. And you haven't paid for anything. You at this point can decide to walk away, and all is good, right? You may not be ready to do this yet. But if you decide to move forward, what's required is a $500 refundable retainer just to start the process, right? And because we're a performance-based service, we do not take any payment until the end of your funding program and you have the funds in your account, right? Then we charge a success fee. The success fee depends on what credit product, but for 0% interest funding, it's 10%, right? And so you're going to know the transparency along the entire process. There are no additional fees. This is everything that you will pay. There's no surprises through this. So we're going to cover, I mentioned this earlier, we're going to cover the top 3 things that I hear from people, right? First one, I don't qualify because my credit is bad. And oftentimes they don't want to take the time to go fix their credit. But we heard from every speaker about how important your credit is, right? To the success of your investing business. Jeremiah talked about credit and how the banks are tightening up. That's why you need a partner to help you through this process. The banks are tightening up. We used to see an average of 130,000 on these credit card funding, and now it's 85 to 100,000. So they are tightening up. Tim mentioned the importance of having cash flow on hand, and the business line of credit and how much advantage that was. And then Chai mentioned a real case of a borrower with bad credit and high personal debt, and that potentially indicating, issues with financial management and questionable character, right? So bad credit is going to keep you from getting opportunities, and there is no better time to start fixing that than now. Lots of things that are holding you back from getting funding can be fixed very quickly. Other things take a little bit of time. So the next thing I hear, I don't want to pay the 10% success fee. So I will tell you, after we've talked about this, I feel like it's very short-sighted thinking considering the long-term advantages, right? Getting repeatable funding at 0% interest. The education to go for additional rounds of funding without paying a funding company again. $1 million, access to $1 million over a 4 to 5 year period of time at 0% interest, and you pay $10,000 maybe on, which may be a 10% fee on $100,000 on your initial first round. And then, you get one-on-one coaching on how to deploy the capital. And every round builds your business credit and lays a successful foundation, which all the speakers talk to the importance of that. And just having the control over this funding, that it's not limited to a property, is awesome, right? And then lastly, I'll wait to find funding once I get a deal. I hear that all the time as well. They're interested in doing the funding, but they don't want to start the clock, right, on the funding, on the cards, and so they want to wait. But Jeremiah and Duran both said, don't wait until you have a deal to secure funding. Be prepared. And so that's really the message for that. So that's kind of the end. So I'm going to stop. I know that's a lot of information, so I'm going to stop and just see if there's any questions that I can answer.
I had a feeling, first and foremost, incredible presentation, and I'm excited for everyone to utilize this resource. I had a feeling that this would be one of the most Q&A type of sessions, because this is something that is actionable that people can do right now. So let's go through a couple of these questions in the side chat. One of the first ones that came up was, these 0% intro offers are 6, 12, 18 months. And so what do you suggest people do after that intro period? How do you see people successfully transition and continue to build their lending business even after that intro offer is over?
Absolutely. That's a great question. We hear that all the time. Just like anything else, you need to have an exit strategy. So depending on what you use the funding for, you need to think about the period that you've got the cards, right? So 12 to 18 months, if you're talking about lending, you want to lend on a 6-month deal, that's fine, right? Leave cushion for some issues, leave cushion, have an exit strategy. A couple of options. Let's just say you don't get paid back in time by the end of this funding period. That's why, again, you can go for the next round of funding, get approved for that. You can roll the balances over to the new cards. So there's a couple ways to do that. And, the last option is you can pay the interest. You can, if you have the balance on there, you can pay the interest. These credit cards have higher interest than other products, like a business line of credit. So another option, right? Secure a business line of credit for emergencies. And if you need to use that, you're paying less interest than you would on a credit card. So there's a few things.
I love it. And then the other question that I had, the speed at which you can get access to the funding seems relatively fast. If someone got started with this process today, when is a realistic timeline that we could give to say, okay, by this time you should have access to your first line of funding?
Yeah. So the average is 2 to 5 weeks. I have seen it in as few as 7 days. And really what that depends on is you and your priority in getting the task done, right? A lot of banks, you need to start a relationship before you get the cards. So you might open a business checking account, wait, a week, and then apply for the funding. Each bank has, specific requirements that they have. And so your urgency in getting those done is what sets the time for how fast you get the funds. But it's all kind of done at the same time. So if you go out and get, make the banking relationships, set up the accounts that you need for the banks that require it, apply for the funding. I mean, 2 to 3 weeks is not at all out of the realm.
I love it. One technical question that we have here in the side chat from Karina is the entire success fee based on the first round, or is it 10% of each subsequent additional capital amount secured?
Based on the first round. Let me caveat that. It's based on what round we take you through, right? We have investors. So I said in the first round, we're going to work with you and teach you how to do it yourself after. If you do it yourself after, you never pay another fee again. If you decide to have us do it for you and with you, then of course you would pay a fee. It'll be a reduced fee, but you would pay a fee for any time we're engaged to help you through that process. So the key takeaway really is if you learn how to do it when we teach you through the first round, you can go for additional rounds indefinitely and not ever pay a funding company again.
Incredible. There's more. They keep coming.
Yeah.
How long is a round of funding?
How long is a round of funding?
Yeah, Marty, you want to provide a little bit of context on that? I think there's multiple ways we could interpret that. One right before that was, is there a fee from the card to roll a balance over?
No. I guess it depends on the bank, but my experience has been, when you start nearing the end, not even the end, like I've got one card that's an 18-month introductory period, and I started getting new, offers from them for other 0% interest cards at the 12-month mark. I had to go back and check my records, right? And say, wait, is this getting ready to expire? I thought it was 18, and it was 18. So that's another example of once you start doing this and paying this on time, you guys, the funding is thrown at you. Banks can't get you enough funding. So it really speaks to how well you manage your finances.
Understood. Is there an amount that you can liquidate? Like, is there a max on how much you can liquidate?
There's not you can liquidate up to the limit on that card. We don't recommend liquidating the entire card. It's good to leave a little bit of a balance, but think if you have 5 cards, 20,000, 35,000, 40,000, 10,000, add that up, liquidate, 90% of each if you wanted to. You could do that. If you liquidate those funds and you're not using them right away, one thing you can do is put them in a high yield savings account to draw some interest so they're available when you need them. But you can also leave them on the cards. Now that you've got approved for funding, liquidation process is very quick. Within a day or two, we can liquidate and have the funds in your checking account.
Yeah. Chai, I want to bring you in for a second here because you work with bank lines of credit, which it may seem similar, but it's actually very different than getting credit cards. What are some of the qualifications that you had to go through that are different from, the process here with Stacy?
One thing I was actually going to ask her the same question. For this type of funding, does it require, before I answer the question, I just have a quick clarification question. Do banks ever require you to provide your financials, your background? Like, how stringent is the qualification for something like this?
Not for the credit card stacking, Chai,
Okay.
but if you're talking about like the business lines of credit or SBA, yes, they require financials, docs, proof of income, all the things, but not for the credit card. That is strictly based on your personal credit profile. So you're personally guaranteeing that through your personal credit.
Okay. Because for what we do bank lines of credits, and it's a very specific credit line called warehouse line of credit. That's bank lingo for it. So warehouse line of credit requires a very sophisticated approach in terms of, I mean, you need to have your shit together in simple
Yeah.
words. But what that means is you are really, I mean, grilled by the banker to build that first, like your entry is hard. Once you are in, just like Stacy said, they are going to give you all kinds of freebies. I mean, to put that in perspective, when you start off, you are going to have a banker ask for literally, I mean, this is how we say it in a funny way, like color of your underwear. That's how deep they can go if they want to. And there is no regulation. We are not talking to Fannie Freddie. We are talking to a private banker. So they can ask whatever they want. There is no specific guideline. But of course, they are also looking at you as their borrower. Like just like we are all here talking about how to deal with a borrower,
Yeah.
they are doing the same thing, except you're the borrower in that situation. So they need to make sure all the C's of lending that I keep referring to, or the jockey framework, that's how they are going to look at you. So the character, the capital, the
Collateral.
capacity, the collateral, all these
Yeah.
things matter.
Yeah.
Except one thing, in case of warehouse lines of credits, the collateral doesn't come into picture until after you create a loan using the money in the credit line. But the entry with the banker or the entry point, that's when you are going to be asked for your financials, and not just simple financials. There are 3 layers of financials or 3 levels of financials. Like financials can be your bookkeeper running profit loss and balance sheet, and you're using that to pay your taxes. That's level 1 financial. Then there is CPA reviewed financials, where you pay, I mean, for my company, I have really heavily negotiated rates. We pay about 6 grand for reviewed financials. And then there is audited financials, where there are companies that come and actually audit everything about your company.
Yeah.
And those are required when you cross a 20-30 million dollar mark. We haven't reached there yet, but we are getting close. We are still working off of reviewed financials. So,
Yeah.
So these financials, when I'm talking about financials, before we even get to reviewed or even audited for that matter, just financials alone can be very, very painful.
Yeah.
Yeah.
One thing that I want to add here. So what Chai just went through, in case like someone's like, well, what the hell is what? Chai goes and negotiates with banks to give him lines of credit specifically for lending. This is called warehouse line of credit, sometimes called note-on-note financing. The reason we didn't go over that during this session is because it's high level. You would need to
Yes.
have been lending for 2-3 years at least, at a minimum, with a large book of business for that to ever be valuable information for you. And so Marty asked a great question. How does this work when you're starting out and not making any money yet? This is exactly why we brought on someone like Stacy, because credit cards and access to these cards is exactly what you can use to get started. And right before this, we went through raising private money from investors. And so to paint the picture, to lay out the track for someone who's looking for step 1, step 2, and step 3, what this looks like is maybe first going to someone like Stacy, getting a line of credit for 100,000 or 200,000, lending that money out, giving yourself the proof of concept and yourself the diligence with your own capital that you know what you're doing, then potentially raising some money from friends and family, private investors, building up your book of business with investors and borrowers that way, repeating that proof of concept over and over and over for 2, 3, 4 years. Again, this is not a short-term gain, but when you're lending, you can build your book of business with focus, with diligence, etc. And then and only then do you need to go through this process to now go to one bank and get a $10 million line of credit. Go to one bank, get a $20 million line of credit.
And
that's the roadmap.
Reward is so worth it. Just, I mean, when I said put things in perspective, I meant $10 million in one go. Yes, the process is hard. Yes, the qualifications are hard. But in one go, I get $10 million at 7% interest. Boom.
Yeah. And
So,
something to know too, there's a lot of steps in between there. So I'll give you an example. Every bank has different requirements, right? The bank and the program that you're working with, Chai, for very sophisticated, and if it's specifically for lenders, that adds to the required documentation and things. But let's back up for a second. When you're structuring your entity, you were taught to set up your entity, for instance, maybe a consulting agency or something that's a little lower risk. That helps you work with these banks to be able to get the capital. And to whoever asked the question, you don't need to have proof of income to do the business credit card stacking. Why it's so popular. It goes based on your personal credit. But as every bank is different, so I'll give you an example. Wells Fargo. Once you do the credit card stacking with Wells Fargo, they actually will offer you a business line of credit, and it's low to no doc, right? Not all banks do that, but there are banks that do that. We know which banks will do that. So we're taking you wherever you start through building slowly and, with the goal building up to what Chai is talking about, but there's lots of steps in between where you can get funding without jumping from, 100,000 in credit cards to, $10 million business line of credit. Lots of things in between. So I think that's distinguishes a lot, and it makes sense that the rigor and paperwork that they're asking you for is likely because it's specific for lending, which is, considered high risk.
And I mean, you guys all listen to Tim Herridge. I mean, Tim is on the next level. Like I'm talking 10 million from local community banks that specialize in warehouse lending. Tim is working with national commercial lenders. Those are more like incubators for hard money lending companies.
Yeah.
Their credit lines start at 20 to 30 million. And then they go upwards of 300 million. That's how Longhorn get their money. That's where Longhorn get their money from.
Yes.
Yeah, you can see it's a process. So we're talking with this is really step one. Can be for new, but we get a lot of experienced investors that, and business owners that use these 0% credit stacking, because literally you could use it indefinitely for, flipping houses or whatever you want to get into. As long as you manage it right and you make your payments on time, it just builds the foundation to give you access to the next level of, funding. Maybe that's a no or low doc business line of credit, and maybe that's 15,000, right? It's a stepping stone. This is where you get started.
Amazing. Stacy, how can people get a hold of you if they want to stay in touch? We dropped a link if people want to immediately start an application, but maybe if someone's not there yet, they have a question or two, how can people stay in touch with you?
You can contact me through my socials, right? Stacy M Carpenter, either one, DM me, or at Instagram or Facebook. I'm probably more active on Facebook, but I'll find you either way. And I would love to talk to you guys, answer any of your questions.
Amazing. Thank you for coming on. Appreciate you.
Thank you, Alexis.
Thank you, Stacy.
Over $2 million lent. Half of it looks like it's credit card funding.
Oh my God.